Trading and investing in crypto isn't just about charts and numbers, it's about mindset. If you don't have the right psychology, you'll get shaken out, make emotional decisions, and miss the real opportunities. I've been in this space for 9 years and I've seen it all. In this video, I'll teach you the mental framework you need to survive and thrive in crypto. So let's get started. FUD, doubt is all normal. This is the first important thing that you need to understand when you invest on something. A lot of people, when they actually see those elements like FUD or feel those things like doubt or pain, they run away. But you should embrace them, because if you study all the coins that actually started and made crazy gains, like Bitcoin, Ethereum, Solana, all the major coins, at one stage they were all FUDed and investors doubted them. Think about, let's get back in the history and think about Bitcoin. Bitcoin launched 2009. For probably 5 years after that was called a scam. Everyone didn't believe on it. Bankers called it a scam. And I mean, they just adopted like a year ago. So still it was a scam. And still there are people that call it a scam, which is crazy. So you got to understand that FUD was part of the process of Bitcoin. What happened with Ethereum? Ethereum had the kind of same movement. Ethereum, when it launched, it actually got FUDed like crazy. Firstly, the FUD came from Bitcoin maxis, because they saw what Ethereum was actually bringing to the marketplace, and they were kind of fear of takeover. They understood that Ethereum had this decentralized thing, computer, DeFi, things that could be built, while Bitcoin you couldn't build something because it was slow, network was very expensive, the complexity via mining and all of this kind of stuff. So Ethereum, when it launched, was called a Ponzi. They called Vitalik like a kind of scammer because he did the ICO kind of stuff. So FUD and doubt was all normal back then, and it worked out. I'm going to show you a chart because Bitcoin and Ethereum are all famous, but I'm going to show you a simple chart because this is a latest coin, Solana. Like, think about Solana on the early days. It launched on August 20, might be a little bit later than that, earlier than that, sorry, but this is the chart that we see on TradingView. And look what happened. From August till end of the year, it went only down. This was one of the worst periods that you could have been an investor in Solana, because all the people that bought here got bored and sold this just to miss a 200x the next year. This is weekly chart. Let me show you how daily looks like. And right now you think like it's easy to actually comprehend and to understand those kinds of dips because you see the chart back in green. But imagine if the chart looked like this today. Imagine if you bought a coin right now and you're like this. Train your mindset that this chart is normal. Don't see this thing. Just here. Here we are today. Tell me if you bought something in, let's say it's August 2024. Right now it's the day which is February 2021, right? Look at it. If you bought this thing, could you hold this thing? Right now, everyone, I'm sure 80%, even for you watching the video, and 80% of other investors would probably call this thing a scam and doubt it and probably FUD it because the chart has been only down. That's what happened with Solana. And guess what? The rest was history. So you gotta understand that FUD and doubt and pessimism are all elements that you need to train your mindset, that on every coin that you're early, they will always be. And not just you're early, but even on major coins. Like, I mean, you got people calling Bitcoin and Ethereum scams today. So those kinds of elements will always be there. And there's no such thing as investing is going to be easy. It's going to be, you just buy something, you erode it, and you do 200x. Everyone talks about 200x for Solana, but guess what? Could you hold this? This is what you should actually train your mind. Think about, this is a coin that you bought in August 2024 and today it's at this price. You'd lose your mind. And it's normal because it's not a good chart, but guess what? That's how you gotta train yourself to actually understand the volatility and to understand that where the FUD comes from, because this is very important. So what you need to understand right now so you can train your mindset to actually be able to understand what is a proper FUD which makes sense and what is a FUD that comes just from people talking shit or competitors. So firstly, FUD comes from two places. One is competitors. For example, let's say Ethereum guys saw Solana back then and they didn't want people to buy. They talked too much into the internet, they share the problems with Solana. Same happened with Bitcoin, guys. It's like a competitive environment, and this happens all the time. When Ethereum launched, Bitcoin maxis that made so much money on Bitcoin, they called it Ethereum a scam because of a fear that Ethereum would take over, and it actually did. Ethereum guys called Solana a scam. Why? Because it was faster, it was quicker, and guess what? Solana did better than Ethereum in the previous bull run in terms of how much X it pumped. Same happened with actually Shiba and Doge. Guess what? Doge pumped, then Shiba came. Doge investors called Shiba Inu scammers. Shiba Inu called Pepe investors like scammers, or probably it's not never gonna work. Like when Solana came, it came with a slogan kind of in a way that it was the competitor of Ethereum and it's gonna be the Ethereum killer. Neo was a coin back then because I was invested, was called like Ethereum Chinese killer. And guess what? Those kinds of narratives were actually attacked by Ethereum guys. So you gotta understand where FUD comes from. So firstly, it comes with from competitors, and most of the time, if FUD comes from competitors, you gotta understand that it's all bullshit and makes no sense. Why? Because a lot of people actually don't want something to succeed because of the fear of takeover. For example, if Solana actually goes up more and more and more, it will take the market share of Ethereum, like it's happening right now. Like Solana is outperforming ETH. It's taking all the memes, it's taking all the fees, and actually the most of the money is on Solana. So the other type of stuff is competitors, which are differently either team whales or might be also people that made money on other coins. Like we as humans always love to actually, it's like natural thing, even if we don't actually have any knowledge about something, if we made money somewhere else, we always talk about the next stuff. I don't know that, like I don't think it will ever gonna succeed, even without actually understanding what it means. Like ask, for example, Bitcoin guys when Ethereum launched, they, even if they hadn't actually research properly Ethereum, they went like, yeah, but I don't know, I'm just on Bitcoin, I don't think that thing will actually succeed, even that if they didn't do the research. So this is kind of the psychology, how people talk, and sometimes it comes naturally. Even you, when someone asks you for a coin, you'll have this kinds of mindset, but this causes like a FUD environment, because when a lot of minds are talking and saying the same thing, of course, people that are early on that coin will actually panic, because they'll be like, look, this guy is someone that is capable because he made a lot of money on Bitcoin and he's telling me that Ethereum right now is not good, so I probably should listen to that. But you don't get where the FUD comes from. So now, here's how to understand what is real FUD that you do consider and fake FUD. When FUD comes and fundamentals and metrics are strong, that's a buy opportunity. For example, I'm just taking Sol, but there are a lot of examples here. If here on Solana you saw the chart going down and only people talking trash about it, but the metrics were strong, for example, fundamentals were strong, team was building, on-chain metrics were actually good, whales were actually interacting with the chain. So when metrics were good and people were talking shit, that's a buy opportunity. This is what you need to understand. A lot of people read something online and they take it for granted. You don't need to take everything what people say for granted. Look at the math, look at the charts, look at the on-chain metrics, and to the empirical analysis. Don't listen to words and narratives. Narratives, words, opinions, always consider, but not more than fundamentals, which are math, metrics, and empirical analysis. So if people talk shit about Solana here and fundamentals was strong, this was a buy opportunity. Now, of course, imagine how hell this chart looks right now. Just I'm telling you just to train your mindset. So imagine you have invested in this coin and you're here. Tell me probably 1% or less than that could hold this thing. Guess what it did next? So the other type of stuff is that FUD sometimes is also real. For example, if FUD comes and if there's a real problem with that coin, of course it's not a buy opportunity, because there's also, I tell you what's real, but I tell you also the other scenario, that a lot of people that are delusional. So they invest on something and they call every problem, they call it FUD because they don't want to accept it. It's like people got scammed on BitConnect back then. They couldn't believe it. They call it, nah, you don't know what you're talking about. This is actually real. So you got like all types of baskets of people. So you got basically people that actually talk about FUD, but FUD is not real and makes no sense. But you got people that actually FUD is there and they consider it FUD, but in reality it's something that is real. It's not FUD, but they consider it like that because they want to justify their emotions and they want to believe in that coin. So it's easy to understand this. If fundamentals metrics are strong, it's not called FUD. If fundamental metrics are weak and there's a problem within the coin, might be a reality. So always look what's happening within the coin, not what people speak. Firstly, look the numbers, metrics, on-chain, empirical analysis, then go to what people say, because numbers means more than people's opinions. Keep this principle in mind. The next thing is that competition is hard, and I always talk about this kind of concept because you need to always think about the competitors ahead. Why this is so important? Because crypto is PvP, which is player versus player. You win when someone else loses. So you gotta always think about who are my competitors. And this is a concept that you need to build when you put money in a coin or even when you trade. So think about Bitcoin, Ethereum when they launched. Like, they had less people, they had less competition. Right now, what's happening with them? You got everyone talking about them. You got VCs, you got institutions, you got banks buying. So good luck competing with buying Bitcoin and winning today. Of course you can win, but winning, I call on Bitcoin buying at 0.1 and selling probably at 1,000. That's what a crazy gain was. It wasn't right now that it's probably doing great, don't get me wrong. It's still the fastest asset class in the decade, but I want you to understand my thesis, what I mean. Like, when there's less people, there will always be the biggest pumps. That's why I always tell that competition is key on everything, and it's a very important metric. I mean, that's what I call buying Bitcoin and selling here. That's what's a really crazy gains. Buying at $3 and selling at 1,000, or selling even at 20,000. Today, there's no chance that Bitcoin is doing a similar move like that because gains are constantly diminishing. For example, we went from 1,003 to 1,000. We went then from what was $200, then we did to 18K, 19K, then we went from 3K to 65K. So this time we probably, hopefully, I think we'll break above 200K. So my point of view is simple. When there's too much competition, you don't want to join. I see so many investors right now investing on something, they see only the use case and utility and be like, yeah, this is amazing, I'm going to jump in. And I always talk about, have you thought who are the competitors? Basically, how many people know about this? Are whales, are VCs, are other stuff, are other people that have accumulated probably earlier than you? Because, for example, the smart money has more privilege than retail. Like, retail can't get what smart money can get. Smart money got better tools, got advanced mechanisms to actually find those projects early, got better connections and better people around them, so their decisions and their trading and their investments are better, and they got the most money. So they're not looking for you that you're probably looking 10, 20, 50x, 100x. They're probably looking with a small percentage. So why I'm not a big fan of VCs, for example. I'm not a big fan of VCs because they got an edge before you. They're always buying before the retail. So if the coin is launching at, let's say, at $1 here, let's say it's launching here at $1, this is a launch. They're buying here at 0.1. They're buying 10x lower than you. So when they launch, they're 10x up. And that's why you ask yourself sometimes why charts go down once they launch. Like, you'd be like, it's crazy, it launched, it should go up. No, because there are whales and insiders that bought lower than you, and you didn't have that privilege. So this is why I say always look about competition, because here's what I prefer and what I personally do for me and my members when I say to invest. For example, I try to chase where the competition is really, really low. For example, it might be a new coin. On a new coin that is actually fairly launched, you have a few people and probably whales that bought early and the team, right? Which is your kind of your competition, because everyone is trying to make money. Crypto is like that. No one that's telling you that, oh, I'm here to build. And I mean, they can build it, but of course they need an incentive, and of course they make money too. So this is what I like. I like joining in a fair coin that doesn't have VCs, that doesn't have too many eyeballs, that too many people talk about it, and that's what I can have an edge. What I don't like, joining, let's say, on Trump Today. Trump Today, everyone is talking about that. You got every single person that you see on roads talking about Trump, even though they probably got less than $100 in crypto. Still, they're experts, right? So you got more people. You got whales, because the more whales you got, the more competition you get, because whales destroy the charts. They play with millions of dollars and probably more. You got VCs, which got, for example, lower prices. For example, a lot of tokens last bull run, gaming tokens, actually had a ton of VCs. Why? Because gaming was one of the sectors that required the most funding. So to build, for example, let's take DeFi, let's take a coin in DeFi, a protocol in DeFi, of course, is so costly. You got developers and all of this kind of stuff, but mostly the stuff that you build on DeFi can run by itself if you actually do it once. Like, there's not much ongoing costs compared to gaming, but gaming requires too much funding to be built, developers to be paid, graphics and all of this kind of stuff, and there's so much operational ongoing costs. So what happens? The majority of VCs funded those projects, and those projects, when they run out of money, what they do? They sell their tokens. That's why for some of the gaming tokens, the charts in bear markets look brutal, like crazy. So this is why I tell that competition is something you should always look when you actually invest on a coin. You always gotta think about who's gonna dump next, or who is my risk ahead of me. So who's gonna dump on the next 100x? I got 50 people, I got 5,000 people, I got whales, or I got VCs, or I got probably exchanges, because even exchanges, we all know that are kind of a competition, because they're always sometimes trading against you. We all know that the majority of exchanges have been actually proven multiple times that they actually trade against you to force liquidations, because that's how they make money. So when you're early on something, you gotta find something that is fair, launched fairly, at least you have the same advantage of others, and don't have too much competition ahead. So always think about competition, because that's how you can train your mindset to know when you should get out. Because if too many whales sell at the right time, of course, what will happen to the price? It will crash. So you gotta be really careful at this. Another very important thing is exit when desire drives the market. And hear me out, because here you'll get a really, really great lesson. So I learned this in the last bull run. For everyone that don't know, I called the top last time, and I told everyone basically to sell Bitcoin at 58k. Of course, wasn't the proper top, 65k, but I mean, if you do the math, I actually saved people from what was that, like 71% crash, while I was wrong probably for 7%. So here's what I learned. A lot of people actually, once they join in the market, they will let the desire actually lead them. So here's what happened at the top. At the top, I told everyone at this stage here, I told at the top that look, and I got also posted that on my Europe. Everyone was actually, how I recognize the top basically, it was so simple. Everyone was saying we'll go to the moon, 100k is confirmed, institutions are buying, ETFs we didn't have, we have it right now, sorry. Institutions were kind of buying, because we had some banks offering some custody, we got MicroStrategy buying like crazy, we got Elon Musk, I mean the richest guy back then in the world, that bought, and Tesla adopted it. So we kind of changed the environment from the previous bull run, because in the previous bull run in the 2017, we had almost no adoption. We had just some CME futures launch here, and that's it. But here we had a lot of stuff going on. So I was actually noticing something, that Bitcoin price was actually struggling to surpass this level here. And I thought to myself for a moment, when institutions, same thing here, when the richest guy in the world bought, when countries bought, because we had El Salvador, I forgot also this, buying. When we got institutions buying, and the price is not moving and is struggling for such a long period of time here, and it was actually near the proper end of the cycle top, which, for example, the bull run lasts on average 1,064 days. It was almost kind of near that time frame, and I told everyone that, look, I don't like the environment, and I'm probably looking to get out. Everyone back then came to me and talked negatively. Why? Because back then, a lot of people that actually are told to sell at the peak didn't actually understood that didn't understood cycles. So here's what happened. Let me show you something. A lot of people that couldn't sell at the top were probably investors that joined during that year, while investors that probably bought the bottom were more than enough happy with the profits that they made. So the same type of stuff will happen again at the top. Probably sometime in Q4 2025 this year, you'll probably see the guys that join in later 2025, probably by summer later on, be like, you don't know what you're talking about. And that thing will come from their desire because they want more gains. They're not happy. They'll see people that bought early coins from the bottom and they're up 100, 200, 50x while they are just in 2-3x and going to be like frustrated. And that's what happened last time. I got a lot of people that were frustrated that told me you don't know what you're talking about, and I was right. So you need to keep in mind something. When fundamentals and things, when basically people lose the common sense and desire actually drives them, it's time to actually get out, or again, consider getting out. I'm not saying it's 100% right, but when facts and basically narratives are speaking and metrics are speaking that all things have gone well while the price has not gone well, it's like a really red flag. Again, if you don't want to trust this 100%, try 80%, sell 70%, but always go with things that make sense. Don't lose the common sense and let the desire drive the market. So when I told everyone to sell here, all the hate was usually from people that bought later on. And that's what's going to happen again, as I told you even earlier. Keep that in mind, that when you actually try to think about, I'm going to make money because I want it, or you try to see another guy that actually made 200x and you made only 120 and you want to achieve that as soon as possible, that's the worst period of time, because that's exactly how you'll do hasty decisions and don't know what you're doing. So you gotta exit the market exactly when desire drives the market. This is exactly for the top. So when people lose the common sense and when all the metrics are positive and the price is struggling to go up, it's a big red flag. And I learned this because this is something that I did last time, and I'm speaking because I did it. A lot of people that tell you this kind of stuff haven't even called the top of the bull run before. So be really careful. Don't let the desires or the competition in terms of, oh, my friend made a lot of more money than me, I'm gonna make more than that, to actually drive you, because that's how you're gonna lose. And listen, below I'll leave you a link where I actually shared my free webinar where I teach exactly 3-step process to cash out at the right time, and actually I revealed my 50x system I use to find the right altcoins for this bull run. Link is below if you want to watch that. And the next thing is that everything you put, consider it lost. This is really a mindset trick that can really help you to achieve so many great gains in crypto without stressing yourself and without actually asking 24/7 what's gonna happen, and you are panic all the time. So the first thing that you need to understand is that you don't need to think about capital preservation. Hear me out, because this is very important. A lot of you might think like, oh, what you're talking about. So capital preservation, the concept basically on capital preservation comes from financial markets, right? Warren Buffett, stocks, on stocks actually is saying that, and a lot of smart investors are saying that, agree 100%. But crypto is a different thing. Like, the risk that you got on crypto is enormous compared to financial markets, and also the reward is enormous. So here you risk it, but you risk it for gains that can really change your life. Because, I mean, can you do 50x, 30x within a year in a stock or in a business? Like, it's almost impossible. I would say very rare, but almost impossible. So I always tell to people that the mindset that you need to have when you join in crypto is that don't think about capital preservation. Always don't lie yourself and put what you can really afford to lose. So what the mistake of people is that they actually overinvest and they talk about capital preservation. Like, here's the problem. In crypto, you don't need to overinvest. And this is the truth about it. A lot of investors are lying themselves when they be like, yeah, 10,000 is what I can put. It's not true, because you understand truly what is really what you can afford to lose. When you think about capital preservation, when dips comes, people lose their mind, and that's where they actually show their true emotions and their reality, if they really overinvested or put it what they can really afford. So if you can really put what you can afford to lose, but in real, not by just lying to yourself, you don't need to think about capital preservation. So this concept of capital preservation is like a fake thing that comes mostly from people that overinvest, while people that actually put really what they can afford don't need to think about that type of stuff, because crypto is a magical thing. Like, I always tell to people this principle that I have, and hear me out because it's very important. In crypto, you invest what you can afford to lose for an opportunity to 50x or 100x your wealth, right? Or your money. So you're putting what you can afford for 50x or 100x. If that's what I'm risking, I'll do that all day long. And people don't do that, and then they talk about capital preservation. Because let's take an example. If all your savings are 100k, you got it right now in bank, and you got a house too. So you got 100k in bank. If you put, let's say, 3,000 in crypto, it's something you can afford, right? But if you put more than 20,000, it's kind of risky because it's more than 20% of what you got on bank, right? So 3,000 is okay. What people do is that put 20,000 and be like, yeah, man, I should keep it. While in reality, they'll put 3k. And on 3k, you don't care about capital preservation because 3k is a small percentage of your wealth, of your savings, right? So that's how you gotta train your mindset. You always think about capital preservation when you overinvest. And the problem with overinvesting is that you will actually go on an emotional roller coaster. The stuff pumps, you get overhyped, but actually you'll have the fear because you'll be like, yeah, I'll probably get out because what if it comes to break even? Then if it dumps, you're gonna lose your mind. You're gonna think about capital preservation. So when you overinvest, you always think about, even when it goes up, should I get out right now? Even when it goes down, should I cash out because I got a lot of money? So I would tell that everything you put in crypto, consider it loss. Don't try to think about capital preservation. Better put less amount and you'll be in peace of mind and you'll actually achieve more gains. And this is what I tell people, because they have this mindset that, look, if I put more, I'm going to make more. Not true. Because they see gains like, oh, but Solana did 200x. If I put it 1k, I would have made 200k. Imagine if I put it 200k to 20k, I could have made 2 million, right? Or more than that. Because 200x is like more, 4 million, right? But let's call it 100x, 2 million. But they don't get that. Good luck trying to put 10k and tell me how you're gonna hold when you go like this. So you put 10k, you'll go like this. Okay, you put 10k, you go 100k. Then you go back to 5k. You'll be like, shit, it's lost. I better cash out that 5k. A lot of people don't think. They always do the math in their head. They always think about 100x, but they forget how you go there. You don't go there in a straight line. You go from 10k, 20k, 200k, 500k, back to 20k, and then they lose their mind and you sell here. So that's what I'm telling you. You need to do the math properly. And this is why if you put what you can afford, you'll be immune to dips and pumps, because on dips, you don't care much because you invested what you can afford. On pumps, still you can hodl because it's the money that you can actually afford and you are trained your mindset and you can handle the volatility. But if you actually overinvest, of course you can't handle the volatility. You can handle only with words when you put your money in. Many investors, when they put money, they be like, yeah, I can handle. Words are different. Like a lot of people right now are calling for bear market starting. Why? Because they're losing their mind because they're all overinvested. This is the problem. And one other thing which is very important concept when it comes to actually this strategies, all what you gotta do, but people don't do it, is that you don't actually buy to justify your emotions. And hear me what a lot of people do. So a lot of people buy something and it goes up and then it goes down and all the volatility. But the problem is that when things go down and they've bought, let's say here at the top, they gonna be like, buy the dip. Buying the dip is great, but what people don't understand is that there's a line between buying the dip here and what you can afford, because people try to justify their pain of not feeling good that things are going down by buying the dip. If you can afford to buy the dip, of course do that. Of course do that. I shared a post on IG a few weeks ago. Everyone told me, oh, but why should buy? Should we buy tops? No, there's more in depth on what I speak than just reading one sentence and being smart about it. So when you buy something and you buy the dip and you can afford, that's a really smart play, because you lower the average price of buying, you lower it down. But few people do the math properly and they're down, and because they can't handle this kind of feeling that, oh, something is not working here, what they do is they go like, I'm gonna put more money, because they feel better about that. They be like, I bought the dip, but they don't calculate that they probably overinvested and they cross this line. So when you buy the dip, always think about the line of overinvesting. Don't try to pass this just because you want to justify your emotions that you feel good. So be really careful when these things happens, because I see happening all the time. And sometimes these are mistakes that once you do them are very hard to correct them. And a lot of people will just leave it with time and gonna be like, yeah, I'm gonna leave it like that because I made mistake at the beginning. I tell to people, they got, let's say, 100 grand into the market, they be like, oh, I know I overinvested, what should I do? You can't what to do, man. Or people ask me all the time, how I can remove emotions when I invest. There's nothing like a magical trick that can remove your emotions. You can meditate, do all the cold shower and bullshit thing all day long, but everything comes down to overinvesting. Just get some money out. If you got 100k, get 20k, 30k, leave only 70k, and you're gonna be more comfortable and gonna have peace in mind. The other thing is to not consider losses are normal. This is a bit controversial. A lot of people will actually tell me what you're talking about, but listen, because this is for the good of you. So here's what I tell to people. Don't try to consider every loss as normal, especially in the bull run, because there are a lot of people that try to trade, try to invest, they just start out, they don't have the right knowledge, and they be like, yeah, it's part of the learning process. This is true. You can't lose without learning, but you gotta understand that there's better alternatives out there. Don't try to do everything on your own, because let's say if you start with 1,000, you lose 5 times, which is something that of course it will happen because you're just starting out. You lose 5,000. You don't need to think about losing 5,000. You need to think about losing 50,000. And many of you might tell me that, yeah, but you lose your mind like this because if you do that math, you're gonna go crazy. It's true, but this thing will push you to actually make more money and do more informed decisions. Because when you have the mindset that, oh, it's part of the process, you just lose, and without doing the math, how much you lost, you're not considering it. So it's good. This is a Warren Buffett quote. It's good to learn from your mistakes. It's better to learn from other people's mistakes. So I'm not saying that this is not good and you should consider all losses like, oh, you actually made a fatal mistake. But you need to understand that right now, a smart one learns from the mistakes of others, not try to actually go through it. For example, when I started out, I had the mentality like lone wolf narrative, all those bullshit things that you hear on social media, and I tried to do everything by myself. It costed me probably 6-7 years to become successful. I did everything by myself. I listened to many people, I listened to many YouTubers, crypto influencers, but I didn't have like a proper guide or a proper actually figure to tell me exactly what to do. Nowadays, you got mentors, communities that can help. So don't try to do it by yourself, because it's not that you lost 5,000. You lost to the opportunity to turn that 5,000 to 50,000. This is my concept about it, because a 10x is nothing in a bull run. You could have turned that amount of money to this. And you have no idea how many messages I get from people that wanted to join my private community before. They actually had the money and they hesitated and they went and did it by themselves. After 6 months, they messaged me, I lost all my money on trading. I wish I joined your community. So I tell you this kind of stuff because you need to be smart about your decisions. Don't go with the mindset that it's part of the process, because sometimes when you call it's part of the process, you actually forget where we are at the cycle. So there are people that starting right now in crypto and be like, yeah, I got time, I gotta learn. Listen, the harsh truth is like this. If you really joined in crypto in the last 1 or 2 years, I'm going to tell you the harsh truth. You'll never be able to actually be a proper investor in crypto. And I know that you might even made 100x and you'll be like, oh, you don't know what you're talking about because I joined 2024, I made 100x. Listen, I know a lot of stuff. I know a lot of people that have acted smart in the last bull run. I've been in this game for 9 years. But the more humble you are, the more money you'll make. The more egoistic that you judge the market based on what you achieved so quick, the more market will humble you later on. So you gotta understand that investing in crypto is not about making money. A lot of people made money on NFTs here. Guess what? They didn't sell. Look at the celebrities that made millions on NFTs. They didn't sell. So investing is not just about making money. There's more way in-depth things that you gotta manage and you gotta actually know what to do. So again, try to consider losses like 10x more than what you lost, and probably you'll make more informed decisions. This is something that I applied for myself, and really it has elevated my journey in crypto. A very important concept that few people talk about in crypto is to sell when your life can improve. And I'm going to tell you exactly why this is so important, because no matter what you achieve, no matter how smart your analysis can be, I don't care. If the money that you want makes an impact in your life, you can definitely get out, because this is a strategy that you'll never regret it. No matter how much you can make more than that, it's still meaningless if actually the money that you want makes an impact in your life. If you actually make more than the money you want makes an impact in your life, it's all greed. So you have to be really careful. You have to do the math properly and set your goals properly in order to make the right decision to cash out. Because there are people that invest 1k and they want to make $1 million. Like, this is stupid. Like, if you invest 1k and wait $1 million, just get out the first 50k, 100k first. Go climb your mountain slowly. Don't just go and be like, and try to be a superhero because you hear some stories on social media that you see, oh, this guy bought $20 here and he made 400k, and he was an insider, because you don't know that. You're not skilled enough to check the on-chain metrics. So a lot of stuff that you see online is all fake. You need to understand that it's all paid promotions to make people rush on meme coins and all this kind of stuff. Of course, there are people that do that. I'm not saying that they didn't. There are a lot of people that didn't ship Pepe and all of this kind of stuff. But the odds are against you. That's the whole idea. So when you actually build your cash out plan, you gotta ask yourself two simple questions. What is my network? For example, you got 100k. How much do I need to change my life? If you got 100k and you make, let's say, another 100k in crypto, of course it can impact your life, because this is double what you had. And you might be like, yeah, but it's just 100k more. Guess what? It can impact your life. So everything that fulfills your life's needs and impact is for great, I would say it's a really smart strategy to get that out. Now, of course, I'm not telling you go and cash out 100%. If you're a risk investor, cash out 70% and leave 30%. Or basically, the percentage you determine always based that on your risk tolerance. So I can't say it's a black or white and you gotta cash out 100%. Definitely, you know yourself better than me. You know if you're risk tolerant or not. So, example, your life savings, 100k. You invest in crypto 2000, let's call it like that. And now you have made 100k in crypto. You sell or not? This is how you gotta train your mind. For me, this is definitely a sell. Why? Because you'll have never made this kind of money in such a short period of time before. So crypto is the only thing that you made it so quick, and it can impact your life. Or let's call it's 200. Let's go with 200. You make 100x. You make a crazy number. So you made 200k. 200k is an amount that you never achieved in your savings. You never achieved in your life before. So why you should be greedy and be like, yeah, but 500k can pay me for mortgage and cars? You shouldn't think your mind about what that money can do when you have never had it before. So everything that you made after you have never had it before, it's a signal that you need to get out, because you need to experience that first. Don't try to actually think about the desires and what can do if you wait a little bit more, because a lot of investors in the previous cycles got destroyed just because they thought, oh, they made, let's say, their goal is, look what they did. The goal is to make, let's say, 200k or 100k, and what they did, they made 100k and they went like, listen, here at the top, it's just a 2x, it's nothing, like market is pumping. And at this time you don't understand it, because during the bull run everyone is euphoric. It's funny because everyone will make fun of you if you tell them to get out during the bull run. Like I remember here, everyone called me crazy for getting out. So everyone will make fun of you when you cash out in the bull run, but trust me, there's no such thing as you not feeling good for not cashing out. Like the best thing is to actually get out when what you want makes an impact in your life. And you need to understand a very big concept when it comes to crypto. In crypto, you'll never be happy. Here's what I mean. Whatever you achieve, you'll never be happy because there will always be another guy with more money than you do. When I call the top, I tell this to myself today, when I call the top here at 58k region, I be like, oh, but I could have sold to 65k. Like, makes no sense. Like, look how stupid it is. I prevented people from selling 73%. I was wrong by, what's that, 6-7%. So still to this day, I tell to myself I could have done better. I did 200x in the last bull run for me and my members. You can verify all the proofs, no bullshit talk. And still I be like, I could have made more. So whatever you achieve, you'll always be like, I wish I could have achieved more. And no matter right now, maybe you don't understand it because you have like a target in your mind. But once the bull run comes, the proper gains of the alt season comes, you're going to understand how crazy the environment will be. Everyone will chill their 7-figure profits, 8-figure profits, cars, watches, lavish lifestyle. And you're going to feel like, yeah, you can do it. Like you'll always feel like a small fish. So keep in mind that in investing, you'll never remove the thing I wish. Oh, I wish I did that. I wish I did that. But the goal, listen to this carefully, the right goal of crypto is to minimize that quote, I wish. So here's what I mean. Let's say last bull run, you bought Solana. Let's go with the weekly. Let me find where's the proper chart. Yeah. Let's say you bought somewhere here at $1, right? And here you're up 50x in May. So you bought $1, you're up 50x. You put it, let's say 10k, you made here 500k. 500k is something that you've never achieved in your life before. Just take an example. You sell here, right? You sell at this region. When you see Solana running here, you're gonna feel like shit. Why? Because you're gonna do the math. You're gonna be like, oh, it made 200. If I put it 10k, I would have made 2 million. I only cash out 500. So you're this kind of guy that's suffering from this move here. But you gotta choose your suffer. Do you wanna have this kind of suffer, or do you wanna have the suffer that you probably are up to 100x and here at 2 million, you never cash out because you'll be like, oh, it's just here touch like 250, just a 2x to 500. And you never cash out and you write it back to zero. So what suffer do you want? The suffer that you made money but still you could have made a little bit more, or the suffer that I was a millionaire when I was broke. I was broke at the beginning, I became a millionaire, and then I didn't cash out and went broke again. So you gotta choose your pain. I always tell to people, you'll always say, I wish I did something. So even when you go up here, you don't think that. So when you cash out here, you always think like, oh, I wish I hold there. But you don't understand that what if you wish you hold there and you never sold it and you rode it back? So you gotta choose your pain in crypto. There's nothing like you're gonna be always 100% happy with what you achieve. There's nothing like you being 100% happy with what you achieve. Like it happens even to me to this day. You'll always be like, oh, I wish I did more, because there's always competition. There's always people around talking about crypto, lavish lifestyle, different purchases. So you don't need to get influenced. The goal again in crypto is to minimize the thing I wish. It's not to remove that. You can never remove that. You wonder what is this PayPal Mafia photo that I've shared here, and this is something that was like a circle of the big entrepreneurs years ago. It was Elon Musk, Peter Thiel, like the smartest minds in the world probably were in this kind of circle. So collective intelligence is so important, because if you can use this, you can actually make so much money and really have the clarity and a right direction. Here's what I mean. All those guys were in a group called PayPal Mafia, and all of them built billions and trillions dollars company. And this is not by luck or something that happened because they got lucky. No luck happens when you're with all the smart minds in the circle or in the group. So the same thing I want you to do for crypto. Why? Because it's so important, because one can give you better investment. So you do better investments on coins, you do better decisions, like when to sell, what to do, like exactly what I'm telling you right now, and you got like a clarity into the market. So don't try to be frugal when it comes to investing in your crypto social. Like I always call it like that, because you need to build also your crypto social group, so you actually have more opinions in your head when you actually want to do something. So when you actually go into the market and you're unclear about something, probably buying Sol here, sorry for that, probably buying Sol here, and you don't know what to do, maybe you're panicking, but another guy which has been in this market for longer than you can help you and tell you that this is normal, like I'm doing right now. But this is an opinion. This is you utilizing collective intelligence. So you take other people's mindset and you implement it on yours. So that's what you want to do in crypto. Have as much as possible people around you that of course are capable. I'm not telling you go and follow everyone on social media and trust them, all of them. Try to get to know so many people and try to invest in their mentorships, groups, and try to be in many communities. One thing I did a lot on my early days is that I tried to spend I spent a lot of money on groups, courses, and communities. Of course, I lost the majority of it, because the majority in this space, they're just manipulators, scammers, they run pump and dumps and all this kind of stuff. Of course, I knew this kind of stuff back then, because this is something that happens. But guess what? Few guys I found really helped me a lot when I started out in terms of having a clarity into the market. It's like, it's not just about making money, because a lot of people be like, yeah, I'm joining on this group to make money. It's not just about that. There are simple things, or one sentence or one advice that can really change your life and help you for many, many really great things. For example, I didn't knew that I would call the top in the last bull run, but I did it in my community, and people value that thing more than 200x that they did, because gains in the bull run, of course, are hard because it's not 200x, small numbers, but sometimes people get lucky. So again, there's a big difference between someone achieving 20x and someone achieving 200x, but still, you get my point. Like, you get better investment decisions, you get clarity into the market. For example, people lost their mind on the first dip that came, few days ago into the market. But guess what? The people that were inside my community had kind of the right direction, what to do about it. So if you have the right direction, of course, you'll not struggle. And it's better to have 10 opinions from smart people rather than just one, which is yours on this dip. So try to invest in your crypto social circle, because it will make you have like a peace of mind and make you more clear on what's happening into the market. You don't need to actually suffer on your head and don't know what you're doing and probably call this space a scam and leave out, like a lot of people do. New coin, new business. This is something I tell people all the time. Everything that you put in crypto, consider it as a business. Many investors join in this space, and what they do is they try to diversify as much as they can and capture all the pumps. This is a mindset that people have, like, I'm going to diversify to catch all the pumps. This is not how wealth is made. Warren Buffett said that wealth is made on concentration. Diversification protects wealth. Like, you're trying to join crypto to make wealth and you diversify. Makes no sense. So every coin you buy, you gotta consider a new business. And this is like a mindset trick, because it will help you to do the right research and think for everything you buy like you build a business. Like, for business, you think properly. You do all the business plan, all the roadmap, you calculate everything. But for crypto, investors are, I'm buying this Chainlink and I'm just, who cares? BlackRock loves it, or it's the most used crypto out there in DeFi, and they just go with that and they just buy it. And the problem with that is that sometimes with this kind of mindset, people make money, and they think that just because they made 1, 2, or 3, 4 times money, they think that is something sustainable. It's not, because it's something that will destroy your mindset, because it will make you to not research something but just research the basics about it. I would say that more than 90% of people that I've talked in crypto just know the basic stuff of what they're holding. So let's say they got, for example, Chainlink. They know the use case of Chainlink or what it does, but they have no idea what about the upgrades, what's going on Chainlink in the past few days, something about the founder. Like, you should know everything like the back of your hand. Like, on your business, you know everything that's going to happen, right? Or it's happening, or the future developments, or what you're going to build or do. But on coins you invest, you always be like, it's just crypto, man, I'm just going to put it. Like, I mean, you can do it like that, you'll make money sometimes, but it will just train your mindset in the worst way, because you just get lazy, you just want to do something quick, and you're just gonna leave it like that. That's what many investors do. So if you want to do the right stuff, try to think about everything you invest in crypto like a new business. In crypto, if you're not able to have a stoic mindset, volatility would destroy you. So what happens to majority of investors is they put money, and once things go up, they become greedy and think about, oh, this thing can go another 2x. When things go down, they might actually lose their mind, and that thing is not that worse, it's not that bad, but they actually in their mind they make it so worse because they're fearful of losing money. This happens all the time. But if you're not able to have like a stoic mindset, that even when things are fearful you just stay the same, and when things get greedy you just stay the same, you'll suffer a lot. And here's what I mean. For example, right now that Bitcoin is struggling, everyone is asking if Bitcoin will touch 150k. But if you ask an investor here when things were going up, everyone was telling you 200, 300, 400k. So the conviction changed just because the candles change. And this is something that many investors do, and they get just emotional because of the market. Like, you shouldn't change because some candles changed. Of course, I mean, if you see a big red candle, you get my point, makes no sense. Of course, you should sell. But in general, people overreact to dips and also pumps. When things go down, they become so emotional. They think about bear market starting, they think about they're going to lose their mind. The same thing happened here. From March till the elections that Trump won, we went sideways and down. Everyone thought the bear market is over. Bull run is over, sorry. The same kind of stuff is happening right now, and probably when things go up, they're gonna say 300, 400k. But if you go on a roller coasters on emotions like this, you will actually suffer a lot due to the volatility. So what you have to do is you have to create the ability to stay stoic. So when things go up, always remember to look at empirical analysis and facts into the market. Here's what I mean. For example, when the bull run, let me do it like this. So simple scenario. Bull run lasted here for 1085, might be a little bit less because I've not drawn correctly, but anyway, 1071 days, right? Bottom to top. Here, bottom to top is like 1092 or 70 something. I haven't drawn, but anyway, 1000 something days. Here's what I mean. Right now we are on, let's do it from here, 1000 days. Let's put it probably at September, October, I think. Yeah, it would be something like October, November, something like that. Now, when you see Bitcoin here probably at this range, or let's go to the previous things, when this chart, when this pattern showed that the bull run is likely over by this time, people got over bullish here and they thought like 100k confirmed because things were going up. So when things are going up, people become greedy and they want more, but they actually don't look at patterns and important empirical analysis. So when empirical analysis, pattern, facts speaks that something is different, don't just look at the candles, because if you look at the candles, you'll actually be just manipulated from the current move and not able to see the future. Same happened in the bear market. Like, people here actually got overreacted. They thought it's over, crypto is going to go to zero, Bitcoin is going to just never going to go up. At the bottom of the bear market in 2022, people thought Michael Saylor will get liquidated, Bitcoin will go again to 3k, all this kind of stuff. So don't try to overreact, but try to have like a stoic mindset when things come. To have that, you need to just look at the facts, empirical analysis, and not just listen to what people say and sometimes what charts at the moment are saying, because charts can change so quick. Here you might argue and say, but yeah, but charts, it's showing that it will go up. Yes, but if you just play the moment, what's going on, you're not able to see the future. You make money by having an idea where things can go into the future, not overreacting about the current environment. It's like people are overreacting right now in crypto and asking why those things are not going up, they're gonna go down, like makes no sense, like I'm gonna sell. I mean, firstly, why I should sell? The cycles show that the top should be Q4 2025. Secondly, Trump is buying, ETFs are still buying, Ethereum too. Show me one time that we had a dip before and the crypto dumped after US presidential elections. Like there's never been a time that crypto went down after US presidential elections. So yeah, but I'm not feeling good. Like, of course you're not feeling good, but that doesn't mean that you should sell. So this is how you gotta think. You gotta have a stoic mindset when it comes to investing, because a lot of people just overreact. So you have to be really smart when these things comes and not just follow the narrative and what people say. And we come to another thing, that you should look what they do versus what they say. A lot of people try to focus on what they say. Many investors say things just to manipulate you. So institutions, what they do, they tell you that Bitcoin ETFs should not get approved. They tell that SEC will probably reject them. So you panicked back then when Bitcoin was near the approval. And guess what? They load it, the ETF came, and right now you're actually bullish about that. And probably somewhere near the top, they're probably gonna sell and not tell you. So always look what they do versus what they sell. On everything you see online, there are people telling you, yeah, I don't get paid to shill, and then on the other day that actually promote a referral link. Like, look what they do. It's different what they say. On social media, they say so many kind of stuff. If you just focus on their words, and if you just don't have a research process to actually go beyond what they say, you're just gonna fall for the manipulation. Like, always, for everything you read, go beyond. Don't just think about what they said and just take it for granted. Think about why it's happening, why they're saying that. Probably that I miss out and they pump it later on, or why they're doing that. Probably because they don't want me to do this. So always think about why they said something. Like, put kind of yourself in their shoes. What you do, you always have to think about this kind of stuff, because if you just take everything from granted, you're gonna go in a roller coasters of emotions. Like, I can tweet a day Bitcoin to 300k, then you're gonna be like, oh, I'm gonna buy more, I have to buy more. Then another guy said, oh, it's going back down, bear market is starting. So manipulation is always there. If you just watch what they say, you're gonna fall for it. Look what they do. Institutions told you that Bitcoin might not get approved. Then they accumulated in silence. Bitcoin got approved and you missed out. Same they're kind of doing with Ethereum right now. They're telling probably people that Ethereum is trash. Look at the propaganda on Ethereum that's happening on Twitter. Everyone is calling it trash. And probably in the next few months it's gonna shoot maybe like XRP did. And then guess what? They load it. They did the manipulation, so you panic sold, and then they rode back up. And then right now that probably Ethereum is 10k and you want to buy it at 10k, they're probably gonna sell. So always chase what they do and think about every sentence that someone writes. It's always a message basically on that thing. Get more behind people's thought. Don't just take something for granted. A very important thing that I tell to all investors in crypto is to never basically view it as a last hope. This is something that many people don't understand, but they have this kind of concept that being 24/7 in crypto is something that they love. They're going to want to leave their job because they don't want to do that. They want to join in crypto 24/7. I'll tell you something from being crypto 24/7. It's the worst thing to ever be. Why? Because crypto is built mostly for investment, and the more you try to chase like a cash flow or something that you want to build in short term, you actually struggle a lot. So the best setup in crypto, and this comes from someone that have tried and been 9 years in this game, the best setup in crypto is this. You as an individual have a business job, and then you see crypto as an investment. So you have your main cash flow and your main income fixed, and crypto is like an alternative thing that you're looking to grow your wealth. These are the people that make the most money. From 9 years that I've seen in this game, I've seen that people that have a consolidated business or a job, basically that got their income fixed, that put money in crypto, make always more money than people that just got some savings and they want to put it on crypto and they want to rely on it. If you rely on crypto as last hope, you'll suffer a lot. You'll make the worst decisions. You'll lose your mind. You'll have probably the worst experience of your life. Trust me when I say this thing. I don't want to make you fearful because you have done that, but I'm telling you that this is a reality and this is a better alternative. So you should never view crypto as a last hope. It's better to actually have a consolidated business and fixed your cash flow and income first and then look for crypto, rather than try to have some savings and you just join on crypto. If you have some savings and you want to join on crypto, I would say invest something you can really afford, and the rest of your savings put into fixing your income. Because in crypto, everyone joins about the idea, yeah, I'm going to trade, I'm going to do this, I'm going to do that. Like, everyone wants to be 24/7 active here. But if you look at the stats, 90% of traders, more than that, lose all their money. I know the idea that you want to be 10%. Everyone wants to be 10%. But trust me, it's not smart to get on a market that 90% of odds are against you on trading. For example, you got many businesses and many things that you don't have 90% odds against you. So this is a harsh truth. I don't want to tell you because I want to make you pessimistic if you are all in crypto, but I'm telling you that if you just go 24/7, you'll struggle. Of course, I'm not telling you you'll not be successful or any kind of this stuff, but it's going to be really a long period, a long journey. You're going to have so many ups and downs. So you should never view crypto as a last hope. You should view crypto as an investment and think that actually help you to multiply your wealth. Another thing is that what coin you hold, you'll always think like jumping on another coin. So you might actually be on BNB. You think like BNB is trash, I'm going to jump on Sol. Then from Sol you go to Phantom. Then from Phantom you go to another coin. So temptation to chase another coin will always be present. This is something you need to understand and keep in mind that it happens to all. On every coin that I'm today, I'm constantly thinking about jumping on the next stuff that is pumping, right? So everyone that has the right coins have this kind of temptation. This is something you can never try to remove. This is something that you need to embrace it and understand it's normal. Even if you made 100x, you capture Sol, for example, you made all the money in the world, you'll still think about, now I'm going to change for another coin because I'm not sure if it's going to pump more, right? So there will always be a temptation to move from something. Now, in order to understand if there's temptation is right or wrong, you should always look at the fundamentals, metrics, and again at empirical analysis. As I told you even earlier, if the chart is going down and the empirical analysis and fundamentals are strong and metrics are strong, that's called an opportunity. You shouldn't jump. A lot of investors, what they do is they try to sell their undervalued coins for stuff that is pumping, because stuff that is pumping, it gives them like a dopamine hit that something is going on here and others are making money, so I'm going to be on that basket too that's going to make money. So you have to be careful. It's like, for example, people jumping from, let's say, an undervalued coin because it's not moving to chase, let's say, Solana or Solana meme coins because that's where the money is. Like, you gotta consider what's happening within the first coins that you're having, and if there's something truly that is a mistake, or you're just talking because you're just seeing people actually making money and you feel like you're not doing anything. Like, this kind of thing happens all the time. On Solana, on early days, look how crazy it was. It was from August till December that it went down only. Look what happened, for example, I remember Link back then. December to August till December 2020. Look how Link did at that time. August, let me go here. So here's Link. Link from August till December went up only, while you were only going down on Solana back then. And the temptation was crazy. But guess what? You chased Link, which already had the majority of pumps when the top was so near, and you missed Solana that had 200x in front of you. So sometimes a lot of people do this all the time. They try to chase things that are going up because they think that this thing will continue to go up and leave the undervalued stuff. Now, for sure, if the fundamentals are strong, it's an opportunity you should buy. The fundamentals are not strong, of course, the rotation might be great, but always look again at facts, empirical analysis, and fundamentals. If those things are okay, don't run from it. Better put more new money if you want to put on something else. But many investors sold the right stuff for the wrong stuff just because it was pumping. And the same mistake they're doing right now. They're trying to chase Solana memes and all of the coins that are pumping while they forget that the stuff they're holding is probably undervalued. The last thing, which is very important, is to never treat unrealized profits like it's yours. I've done this mistake on my early cycle. So what I did is I invested money and I was, let's say, 50% or 60% or even 70% near achieving my goals. And at that time, I always felt euphoric. I always thought about what I would do. I always tried to actually change my lifestyle because I had this money right now, right? For example, let's say you put 10 grand and your goal is to make $1 million. If you got, let's say, 700K right now, you'll feel euphoric because you're 70% there. And you'll try to go and change your lifestyle, upgrade your lifestyle, do something that you have never done before. And this is a mistake that I've done on previous cycles. If you're halfway or 60% or 70% near your goals, don't change anything until you hit the close or sell button and the money is in your bank, because there's so many things changing on crypto. Like, you might put 10k, you are at 950k, and for 50k you lose all your money because it never touched 1 million, and then you ride it back to zero. So you have to be really smart with your investment. Like, you always don't need to place certain amounts or targets in your mind, like, oh, I'm going to get out on 100x, or I'm going to get out when I make $1 million. Like, market doesn't care and understand what you want. If your goal is to put 10k and make $1 million and you are at 930k, I mean, risking to miss 930k because you want 70k more to fulfill your ego, it's stupid. So you have to realize this kind of stuff, and don't try to change your lifestyle or do things differently just because you got money right now in crypto. Like, that means nothing, guys. The money that you got right now in crypto tomorrow can actually go 50% down, and it will cause you a mental damage that you'll probably not recover. You have to be careful. Don't try to elevate your lifestyle, do stuff that you have never done before, or buy cars or buy houses just because you know that 3 months from now you'll have the money. Like, a lot of mistakes that I've seen people doing, I've kind of had this kind of temptation to do, is the idea that, let's say I'm 60% near my goals, and at that time I went and bought like something stupid because I thought that, listen, in the next 3 months I know it's 99% sure I'm going to make the money and I'm going to have it, so why not buy it right now? So don't let the euphoria, the dopamine to actually take over you and to lead you in hasty decisions that you'll regret later on. So that's it for this video.